Good evening, I'm Liyana Hassanel. You're watching Bizworld. 2023 has been a challenging period for the Malaysian stock market, with the FBM KLCI down 2.5% after experiencing significant volatility. It was mainly due to a rapid rise in interest rates in the United States, resulting in significant selling pressure with a massive outflow of funds reaching 4.2 billion ringgit. The FBM KLCI index was dragged to a yearly low in early June. However, the situation improved beginning last July when foreign investors' interest returned and entered into the local market. The FBM KLCI tested the 1,465-point level several times, supported by purchases from foreign funds and institutions. The benchmark index remains in the range of 1,415 to 1,467 points so far.
Bagi tahun 2024, kami yakin pasaran saham tempatan akan bertambah baik dengan jangkaan pemotongan kadar di Amerika Syarikat dan pengaliran dana ke rantau Asia Pasifik.
The same uncertainty is also impacting the value of the ringgit this year. The value of the ringgit dropped 6% against the greenback in the first half of the year. However, the local currency strengthened starting July and was up 1.3%. Malaysia's economy has sustained positive growth during the first 3 quarters of 2023 and showed positive signs in October, led by industrial production and retail sales. According to the Department of Statistics, DOSM, the consistent performance had contributed to a 3.9% growth in the economy in the first 9 months of 2023. Malaysia's Industrial Production Index also grew by 2.7% year-on-year, a substantial improvement from the preceding month's negative 6.5%. This marked the most significant upswing since May 2023, predominantly driven by the robust performance in the mining sector. Simultaneously, the electricity and manufacturing sectors sustained their positive trends, recording increases of 5.8% and 0.9% respectively. However, the manufacturing sector's sales value registered a 1.4% decline, influenced by a continued decrease in the petroleum, chemical and plastic products subsector. Meanwhile, US dollar is poised for its worst year since the onset of the pandemic, as Wall Street bets the Federal Reserve is set to lower interest rates after reining in prices. After being whipsawed by false starts calling for the end of the Fed's rate hiking regime, a Bloomberg gauge of the greenback is down nearly 3% this year, marking the steepest annual drop for the US currency since 2020. Much of the decline occurred in the fourth quarter due to increasing bets that the Federal Reserve will loosen policy next year as the US economy slows. This dent in the dollar's appeal comes as other central banks may keep their rates higher for longer. Swaps traders are now factoring in Fed rate cuts of at least 150 basis points, with the first coming as soon as March. Oil prices are set to end 2023 about 10% lower, the first annual decline in 2 years. This comes after geopolitical concerns, production cuts, and global measures to rein in inflation-triggered wild fluctuations in prices. Brent crude futures were up 18 cents at $77 a barrel on the last trading day of 2023. Meanwhile, the U.S. West Texas Intermediate was trading 11 cents higher, close to $72 a barrel. At these levels, both benchmarks are on track to close at their lowest year-end points since 2020, when the pandemic battered demand and sent prices nosediving. Oil is also on track to fall for the third straight month due to demand concerns outweighing the risks to supply from the Middle East conflict. And that's all the time we have for Bizworld. I'm Liyana Hassanel. Thank you for investing your time with us and keep tuning in to TV3.